I'm sure, like many of you watching this, I'm feeling a little bit rough at the minute, but I wanted to just make a quick video today covering the latest housing pricing data. They say a picture's worth 1,000 words, so tell me, what's this one saying to you? It's the average UK house price as calculated by Halifax in their latest report released on the 6th of Jan. And as Halifax represent around 15 to 20% of the UK mortgage market, they're typically a good measure of what's going on. If it could talk, I think it'd be saying things don't look too good right now. So what's going on? And most importantly, where do they think prices will go in 2023? Let's start with the headline figures. Average house prices fell by 1.5% in December. That means the average home now costs £281,272. That's down from £285,425. So that means your average first-time buyer, assuming a 10% deposit, needs to save 400 quid less for the average home than they did last month. And if we zoom out further, the average house price has dropped £12,500 since its peak in August. But the rate of decline has slowed in the last month. 1.5% down last month versus a decline of 2.4% in November. Now, I just said the word average a lot. Let's just take a second to highlight the fact that average means very little when you look at properties in certain regions. So the Northeast saw the biggest slowdown in prices, and the average home there now sits at 170k, whereas Greater London, the average house price is £541,000. Honestly, just move up north. The trains and weather are crap, yes, but the people are lovely, and we put gravy on our chips. We're having a great time. Take your 550k and buy this beast where I live. Needs a little work, but 8 bedrooms. A bit like that house, it kind of feels like everything's falling down a little bit, doesn't it? But it is worth pointing out, first of all, that prices for the year of 2022 ended up overall. It seems like ages ago now, but the year started very strong. This bit on the graph here. Average house prices rose around £17,000 between January and August, which was a 6% increase before they started to fall away. The cost of an average home is still greater than it was at the start of 2022, and over 11% more than prices at the beginning of 2021, in nominal terms, that is. Now, you could also knock off the rate of inflation, which was about 10% in 2022, which would push real house price growth firmly into the negative, but you would have needed a pay rise in line with inflation to benefit in terms of purchasing power. But I do think it's fair to say that the market has more corrected rather than crashed after its blistering rise in values post-COVID. But the question we really want to answer is, what will prices do in 2023? Let me just read you a little section from the report. As we enter 2023, the housing market will continue to be impacted by the wider economic environment, and buyers and sellers remain cautious. We expect there will be a reduction in both supply and demand overall, with house prices forecast to fall around 8% over the course of the year. Now, as Halifax make money from people buying homes, they may have quite a conservative view on the fall of prices. Imagine them going, look, we're all f***ed, the whole thing's coming down, but can we interest you in a mortgage? But they're not alone in their predictions. The OBR, the Office for Budget Responsibility, share this sentiment, and they say they think prices will fall 9% by 2024. Rightmove say they think the declines will be much softer, like a 2% overall decline next year, due to what they're honestly calling, this is honestly what they call it, multi-speed, hyper-local markets.
Look, this is the corporate world, Chris. We invent words to unempower those who don't understand them.
Translation, they think certain towns and even streets will rise in price, offsetting the fall in other areas. Let's face it, no one knows what will happen, but the trend at the minute is downwards, and if you asked people in the street, I think they would say they expect prices to fall further, unless the government steps in and intervenes like they have done in the past.
We cut stamp duty in the pandemic for everybody.
But for once, that might not be possible. There's been some fascinating developments in the past week or so that might mean the Conservatives now need to think carefully about how they approach the housing market. Look, I know what you're thinking.
I hate getting all political and
but I honestly think this is worth talking about. But before we do, let me tell you about today's video sponsor. I'm going to offset the political chat with some cobweb action. We all know that NordVPN's main feature is to safeguard your identity and traffic as you browse online. They do this by replacing your IP address with a different IP address. But I want to tell you a true story about how their threat protection feature recently saved me from losing this YouTube channel. So there is a common scam at the minute whereby you get an email that looks like a genuine sponsor is approaching you from a big legitimate company, and they send you a contract to sign. And when you download that contract, it's in fact malware that takes over your computer, skims your passwords, and then they take over your Google account and they delete all your videos and take over your channel. This exact thing happened recently to Tom Nash. Now, this is my business, this is my only source of income, and it's how I keep Cobweb in supply of ocean delicacies and gravy. So yeah, I got emailed from such a scammer as this, pretending to be Stripe, the massive online payment services provider. NordVPN, which acts like a real-time antivirus, flagged that the content of the email was in fact dangerous, and I just deleted it straight away. A little sneeze from Cobweb. To me, NordVPN is both a VPN and an antivirus all wrapped into one, and it's essential for ensuring the security of my business online. It's also really cheap for the peace of mind that it offers, and they currently have an exceptional deal where they're giving you 4 months free on the 2-year plan if you sign up using my link below. So yeah, check out the link in the description or the pinned comment, or go to nordvpn.com/DamienTalksMoney. Thank you, Nord. So the other day, the Financial Times published a chart. It's done the rounds, and TLDR News did a great breakdown of what it all means. Video link below for you. But the TLDR on TLDR's video is that typically as we get older, we tend to move towards the right in terms of our political preferences. But this is just not happening with millennials. I think the top comment on the TLDR video kind of sums this up. You can't get more conservative if you have nothing to conserve. And when we're talking about conserving or preserving wealth in the context of this video, we obviously are talking about housing. Over 50% of UK baby boomers owned a property by the age of 30, but less than 30% of millennials own a property as they hit the big 3-0. Now, the Conservatives are really between a rock and a hard place with this, because a large proportion of their voters are older homeowners whose view of their financial health is tied up in the value of their homes. But if the Conservatives want to stay relevant with younger generations, they need to make home ownership a more realistic goal. So what do? Build more homes? I doubt it. The Guardian has reported that Sunak is scrapping house building targets under pressure from backbenchers. It almost seems shocking, doesn't it? Rents are flying up, people can't get on the property ladder either, and large-scale home building could be the thing that boosts the economy. But politicians are putting pressure on Rishi to reduce the amount of homes they need to build. Seems like a load of wealth-protecting NIMBYs, but I can also understand why many object to developments in their local areas. Rows and rows of low-quality boxes dumped into a town with no expansion of the local amenities, which are already underfunded and scarce. Which means the roads become more congested, and so do schools and other public services. No one wants their town, city or village to be filled with endless rows of substandard housing. And that's what many get when we build more houses. A report by UCL found that 3/4 of new homes built by large developers are substandard or mediocre quality, with 1 in 5 so bad they should never have even been given planning permission. I mean, that is shocking, isn't it? These massive developers hold the UK property market to ransom. They sit on large banks of land, drip feeding substandard homes into the market in order to maximise profit. It's an oligopoly at this point, with the 10 largest home builders building 2/3 of all the new homes in England. That needs to change, but it's not going to happen quickly. And even if prices fall 10% next year, it won't help first-time buyers get on the ladder. If you're sat here now watching this thinking, I earn good money and I still can't afford to buy a home, it's not your fault. It's a chronic undersupply of homes, opaque and unclear planning rules, and a political system that uses houses to win votes. So any support that has ever been offered has always been about supplementing demand. Help to buy, LISA, stamp duty cuts, all supplement demand, pushing prices higher, when what we actually need is massive reforms to the supply side of the arrangement. But with us conceding on building targets, the supply side of this problem will probably remain constrained, likely dampening how far prices can fall. The sad thing is, with this graph in mind and this problem that the Conservatives face, if the government were to step in and help, in my opinion, it's likely going to be more of these demand-based measures again, because they sort of appease everyone. It gives first-time buyers, millennials and the younger voters, the impression that homes have become more affordable, or at least that the government is on their side, while also fueling further growth in prices through making it easier for people to pay more for homes. But who knows, because right now there is absolutely no sign of any help on the horizon. Because recently Rishi came out and said what his priorities are, everything from waiting lists in hospitals to small boats, but not a single mention of the property market. Which seems just crazy to me, because right now the property market serves less and less people positively by the day. First-time buyers are becoming disillusioned, renters are just being hammered, the media blames it all on greedy landlords, which I'm sure is a factor, but you can't ignore the fact that changes to the tax system mean that now landlords can't deduct the interest that they pay on their mortgages from their rent before paying tax. So many are being forced to up the rents or sell their rental units, which then in turn reduces the supply of homes to rent and prices go up. Who is actually benefiting from this current system? Maybe it's corporate landlords like Lloyds who are buying homes aggressively as smaller landlords are just shaking out the market. When will the government take meaningful action to address this issue? I'm sorry, this all started as me looking at some price data, didn't it? And has ended up with a rant. I'm clearly just in a bad mood because I'm poorly. Just ignore me. like the UK government ignores the housing crisis. There's just not much good to be said about the housing market in the UK right now. But I'm going to hit you with a load of positive content, uplifting stuff in the next few days. Get 2023 started the right way, guys. I'll see you on Wednesday.